Welcome to Upticks. I'm Jake Falcon, the founder of Falcon Wealth Advisors and your host of Upticks. Today is episode 175, What to Do When Your Company Gets Acquired. Thank you for joining me back on the show. Hope all of you out there are staying safe and healthy during this horrible pandemic. The holiday season is fast upon us, and I can't believe it. I feel like 2020 and 2021 kind of merged, and it was all one big year. But I hope you and your loved ones are hopefully being able to get together in a safe environment, and hope you have a great holiday season. For today's topic, I wanted to talk about acquisitions or mergers and acquisitions. We've seen a lot of activity in Kansas City over the years, whether that be the Sprint and T-Mobile merger, Kansas City Power and Light, our own utility, merged with Evergy. We had Miriam Labs merge with Sanofi Aventis several years back. We've seen a lot of it. And I think that is something that's interesting because if you're an employee, and we've had many clients that were employees at these companies, it can be very daunting. And so that's why I wanted to talk about it today on Upticks. And so if you're an employee of a company and your company gets acquired, the first step to take is to take a deep breath and realize that you don't know the future. Your manager doesn't know, HR doesn't know. Sometimes the CEOs don't even know what your particular job position and what the future of that is going to look like. Now, you might have coworkers who are speculating, rumors are going to float all over, and I would just encourage you to stick with the facts and continue to do your job and what you enjoy doing, hopefully, and wait to see how the chips play out. So that's step one, is don't panic, don't overreact, don't get your resume and put it out there immediately, right? Understand that you're good. This is going to be an emotional moment. Embrace it, feel the emotions, but I wouldn't respond according to how your emotions are firing. The best thing you can do is actually reach out to your wealth advisor at Falcon Wealth Advisors and take a look at your financial plan. Because actually through our financial planning software, we can start running some what if scenarios. And if that helps ease some of the anxiety, then that's what we're here for. So we can show, hey, what if I just flat out retire? What if my job gets eliminated and it's time for me to retire? What does that look like? Or if I do stay on the company, how much longer do I need to work? How long do I need to hang on before I can retire? Or do I need to go get another job? If I'm forced to get another job, how much do I need to make? How much do I need to save? What does their compensation package need to look like in order for my financial plan to still work? Right? So understand it's okay to have emotions. It's not okay necessarily to respond to these emotions. And the most important thing you can do for your financial plan is to meet with your advisor and start going over these what if scenarios, right? Because it's actually, and many times for most of our clients, it actually turns out to be a really good thing, and it's really exciting. And I'll start here with a real client story, is that DST, which is a major company in Kansas City, actually split off into two different companies, or into two different companies. We've got Broadridge and SS&C now. Both are represented in Kansas City. And I have clients that work for both companies, and both situations, the clients are very happy. And I just talked to a client the other day that works at Broadridge, and they love it there, and they're doing great. They love the company. They like the vision. And I think when they originally heard the news, they never thought that that might be the case, right? They probably didn't know what to think. But again, the good news is that acquisition or that merger is turning out very well for that client. And actually their financial plan is potentially looking even better than it did before. So that's why it's important not to panic. Recognize there's going to be rumors, there's going to be anxiety, it's going to be excitement. I'm not telling you not to have those emotions, definitely feel them. I wouldn't act on them. And if you want to really put pencil to paper, I would encourage you to reach out to your financial advisor, your wealth advisor at Falcon Wealth Advisors, and we can crunch those numbers and take a look at your financial plan and run some projections and see what everything looks like. Now, many times these mergers and acquisitions take place in publicly traded company. And so for a lot of our clients, it turns out that it's typically a pretty nice unexpected windfall. See, what normally happens is the company that is buying the other company, their stock price actually goes down a little bit initially. But if you're on the side of the transaction where your company is actually getting acquired, your stock typically jumps up because what's happening is this company that's buying you has to typically pay some sort of merger or acquisition premium to buy you, right? Because they're buying you. And it said, look, we're already a company, we're doing fine. If you want to buy us, you've got to sweeten the pot, you've got to make it worth our while. So that's why you typically see the stock jump up. Same thing applies here, though. When the news is initially leaked, we don't have a firm price, the stock price still typically will trade in some sort of a range, right? So it may jump up in price, and then if the deal happens, the deal may be a little bit sweeter than what the price is indicated as, or maybe a little bit worse, right? So that certainly can happen. Or the deal could fall through completely, which we've seen happen, and the stock could plummet, right? And could crash back down to potentially even lower than what it was trading before. So there's certainly still some risk in being a stock holder when you hear of a merger or acquisition happening. So in many cases, the most prudent thing to do is just to take that jump up in price, whether it's 10, 20, or 30% from where it was trading, literally potentially the day before, and sell it. Take that cash, diversify, and move on. Or if you want to wait around, stick around and see what the deal ultimately ends up happening, you certainly can do that as well. Just understand there are risks associated with both. And again, not me, nor your neighbor, or your boss, or anybody can really predict that future as far as what that's going to look like in the stock. You also want to take taxes into consideration. Now, it's very important to remember that taxes almost always, in our case at least, as managing your financial plan, take a second or back seat to flat out making you money, right? Because again, I get it, you don't want to pay capital gains, whether it's short-term or long-term. You might have to write a big check to Uncle Sam, but the reality is gains are good. That means you've made money on an investment. So yes, it's tough sometimes when you have to write a big tax check, but that beats the alternative of paying no taxes, which means you made no money. So I'd much rather my clients have tax bills. Again, we try to manage that through our tax planning and keep that relatively low. But again, it's a good problem to have. You've made money, you got to factor in the taxes, you diversify from then on out, and you move on. And that's another point, which actually was going to be a topic for one of my shows coming up, is that many times, if you're an employee or have been an employee at a company, you have a concentrated position. So when you hear of this acquisition taking place, it is, in my opinion, one of the perfect times to take a look at diversifying, right? This is what we wanted to happen. We wanted the stock to shoot up 10 or 20 or 30%. It happened. Let's do that. Let's diversify and let's protect all that wealth that was just created. All right, so hopefully these are some good takeaways, to think about as we're going through more mergers and acquisitions in Kansas City and frankly across the country. Right, so step number one, again, remember this is going to be an emotional time. Enjoy those emotions, enjoy the wave, enjoy the ride, however you want to look at it, and realize that nobody, not your buddy at work, not your boss, many times not even the CEO, knows on day one what the future of your job is going to look like. The best thing that you can do, though, is to meet with your wealth advisor, have him or her pull up your financial plan and take a look at some what if scenarios. If that's going to lower your level of anxiety a little bit, then let's certainly do that and not hesitate to do that. Second, if you're a shareholder, or I guess third, if you're a shareholder, this is an exciting time. It's a great opportunity to potentially diversify. And so you definitely want to think about that. Obviously, you want to weigh the tax implications and just recognize if your stock jumps up on the news, nobody really knows. Also, it could go up more, it could go down more, just like anytime you buy or sell a stock, until we get that firm, inked, concrete deal out in the news, nobody's really going to know. But hey, if the stock's jumped up 20%, we didn't have that built in your financial plan, you can use this as an opportunity to diversify. That's certainly the prudent thing to do, and probably is going to actually help your financial plan because you're taking some risk off the table, certainly if you are already concentrated in one stock. Okay, as always, if you have any questions on this, like I said, me and my team at Falcon Wealth Advisors, we've been through many mergers and acquisitions with our clients. We're happy to guide you through the process and have some of these one-on-one conversations. You can simply email me at jake@falconwealthadvisors.com if you want to set up a meeting to take a look at your financial plan and see what your what-if scenarios look like. I'm also out there on social media, so I'm on Instagram, Twitter, Facebook, and LinkedIn. If we're not friends already, please send me a friend request. I love expanding my network. My company, Falcon Wealth Advisors, is on the same 4 platforms. Also, a quick plug to Corey Bittner, my business partner. He has his own show right here on this YouTube channel and out there on your favorite podcast platform called In the Money Insight. If you're not already subscribed to that, please feel free to do so. You're going to get more organic content from your friends at Falcon Wealth Advisors. I was planning to do a year-end review or year-end review episode, but I thought this was more timely to do something on mergers and acquisitions. But I did already do an episode over on Corey's show, like I said, In the Money Insight with him. Both he and I talked about the year in review and our outlook for 2022. So if you want to check out that, feel free to do so. Like I said, if you have questions for either of us, please feel free to send me an email. Thank you again. I hope all of you out there are having a happy holiday. Hope you have a great new year. We look forward to opening our doors and meeting with more clients in person in a safe environment. And like I said, we look forward to a 2022 and hope you and your family are staying safe and healthy. Thank you again and have a great day.